Good morning, this is Connor from 500 Edge, where we trade SPX 0DTE options. If you want to join the team, link in the description. In this video, I'm going to recap the previous session and break down what matters today ahead of the opening bell. On Monday, we took a total of one trade, one winner, for a total absolute return of $3,717 or 1.81% in our 1% risk model portfolio, where we are risking no more than 1% per trade. The trade was to the downside, long puts, 75.40 strike for 181% return. On the session, SPX traded and closed lower, down 0.8% to 75.15. Growth underperformed, technology down 2.4%, semis down 4.2%, megs down 1%, all which capped upside and pressure downside in the S&P 500. The SPX opened with a gap to the downside, bearish moving average cross, with the 20 EMA in green crossing below the 40 EMA in red. This is a trend change on the 5-minute time frame, which persisted into the close. We broke below the SPY flip level of 75.46, where dealer support was lost, based around just below the 75.30, 75.26 zone for much of the afternoon before flushing down into the previous session's low of 75.08. However, we more or less closed at lows, which is bearish going into CPI here this morning. Our trade entry was pretty close to the open here off 60.65. Another entry here for the retest. Now, the main variables for the short trade was obviously the trend change, the underperformance in the growth sectors, technology. But the main driver here was volatility, open with a big gap to the upside. So we were watching the pre-market range yet again. We had 16.12, 16 on the downside, and 16.5 on the upside. So we were buying that 16 zone, looking for a move at least to 16.5, which did occur. And then we eventually broke out of this pre-market range around 12:30 on the fourth test. More times we test a level, the more prone it is to break. And then we moved into 17, 17.2, and SPX closing at lows, VIX more or less closing at highs. For today, in the early pre-market, equities are more or less flat. VIX relatively muted. Again, going into CPI that's due out at 8:30. On the 15-minute time frame for the SPX, the trend turned bearish. So this cross was in yesterday's session. Following the 5-minute, of course, the shorter time frame is going to lead. So trend is down here on the 15 with the 20 EMA in green, below the 40 EMA in red. Major support on the downside, 75.06 to 7500. So we know that 7500, that big balanced gamma strike, 75.06 marking the previous session's low. So a break of this zone implies downside continuation, with support at 74.80, 74.70, that is 0 gamma, followed by 74.55, 74.50, and then that big 74.30, 74.25 zone yet again. On the upside, bulls need to reclaim these transitional levels. SPY flip 75.24, SPX flip 75.35, followed by 75.50, the previous session's high at 75.65. And then we have a gap. So this is yesterday's gap at 75.65, fill 75.74, and then that big 75.75, 75.80 gamma zone, followed by the SPX call wall at 7600. The VIX remains key for market direction, with the potential of feedback loops in both directions, i.e. parabolic declines if volatility spikes, or squeeze rallies if volatility crushes. Now, yet again, we have a pre-market range, 17.2 on the downside, 17.5 on the upside. A break below 17.2 opens the door to the 17 handle, followed by 16.5 and then 16. I think potential downside target in the event CPI comes in cooler or in line. On the upside, above 17.5 opens the door to 18 and this downsloping trend line, which connects the swing highs on the daily time frame. Now, there may be some variance in regards to where that laps in terms of horizontal levels, depending if you include wicks or not, but it's going to be somewhere around that 18 handle, a potential upside target and rejection point. But the major level, the horizontal level on the upside, remains that 19 handle, which has been a point where volatility sellers have been active for several months, including last week where we tested and had that vol crush all the way down to the 15 handle. So if we're buying dips today, like yesterday, we're looking for peaks in volatility and for that crush to fuel upside. Transitioning over to our dashboard, total gamma exposure for the SPX remains positive, 320 million notional, although you can see this is quite a haircut from the previous session's 1.1 billion, given the fact that we broke below that 45 handle where dealer support was lost in yesterday's session. And today we are below the SPX flip level of 75.35. Above, all strikes are positive, that is supportive for the market price. Below, most strikes are negative, that is destabilizing for the market price. On the downside, 75.05, 7500 is going to be that first major support zone. A break below, all strikes negative. Support 74.80, 74.75. We got the zero gamma here at 74.70, followed by 74.55, 74.50. And then we have not a huge SPX level, 74.25, but of course that 30.25 zone has been a key technical level for like a month now. You know what I'm talking about if you trade the S&P 500. But this is a pretty significant level if we look at SPY. So this is SPY 740. That is the put wall today, which is 74.24 SPX equivalent. In terms of the upside, bulls need to reclaim 75.50. We have that 75.75, 75.80 zone, and then the call wall at 7,600. In terms of the implied move today, 1.1%. That is an implied high of 75.98 and an implied low of 74.32. On the calendar, of course, geopolitics, headline risk remains high, so keep that news feed up and remain vigilant. We have CPI due out at 8:30. Consensus is for the headline year over year to come in at 3.8%. That's down from the previous 4.2%. So a hotter than expected print would likely be bearish, while an inline or cooler print likely bullish. But as always, we're day traders, so we trade the market reaction function, not the data itself. Additionally, here we have Fed Chair Warsh testimony in front of Congress out at 10 o'clock. So likely participants will pay attention to that. And if there's any sort of breaking news, any market moving headlines regarding that, it should come through in our news feed.